America raises interest rates. Will Australia follow suit? Stay tuned.
Hi guys, welcome to another episode of the Paris and Baz cast, talking about the interesting topic of interest rates. A lot of movement happening in the market, fixed rates, variable rates, and the trending we're seeing. So we'll be discussing all that today with you guys.
Absolutely. So as some of you might have seen, there is speculation that the interest rates in the American economy are due to go up earlier than the anticipated hike around 2024. So there is chances that it has brought up earlier. What is driving that actually is the fact that the inflation, so overall interest rates are normally increased when the inflation is going up to sort of curb inflation increases, and is also connected with the unemployment in the economy, both of which are, so unemployment's on its way down and inflation is on its way up in the American economy. Similar results in the Australian economy as well, but not as advanced as what we're seeing.
The Australian economy is done well than expected. That's why there's talk about the tightening of the monetary policy, and especially with the housing market.
So but the golden question is, hello Paul, golden question is when and what else is organized. So right now, America is one of the leading countries when it comes to vaccinations, because that is the other thing that is driving that economic growth. They've had about 47% of their population fully vaccinated with the 2 doses, as compared to Australia right now, which is 5.8% as of the latest.
The latest also was 3%.
Latest count. This is on the World website, and how the increase of the hello, thank you for that, happy birthday,
thank you,
and how the number of vaccinations that is increasing that consumer sentiment and the overall how the economy is performing. Naturally, there is pent-up demand, sort of congested demand for the goods. There is bottlenecks of supply, which is causing that sort of artificial inflation, which is making the government think of tightening the monetary policy a lot sooner. This is all that is currently happening in the American market. Right now, in the Australian market, we have seen inflation go up. We're currently at 1.1%. It has increased from 0.7 to 0.9 and then 1.1 in this current quarter. And there is chances of this continuing to grow as more population gets vaccinated. And the unemployment reduces, which will increase the inflation, which then comes to the effect that will interest rates go up. So let's talk about what we have currently seen in the economy, in Australian economy, with the banks. From what you're aware, what exactly is... Hey, Janamdin Mubarak, there you go.
Thank you, Paul.
Is that Hindi? Lucky I can read Hindi. Good job, Colin.
So what we've seen in the last couple of weeks is the 3-4 year fixed rates have been increased by the major banks, and also last week the 1 and 2 year fixed rates have gone up. So there is a tightening of the monetary policy happening as we speak. So the question that is being asked is, do we fix interest rates or do we leave a variable? Look, it comes down to individual choice as well and what you want. Obviously, with a fixed rate, there's certainty. You can make your budgeting easier, and you got certain set repayments over 2, 3, or 4 years if you decide to fix your mortgage. So there are advantages and disadvantages. So you can split your loan 50% fixed, 50% variable, but also it comes down to individual circumstances again. So a lot of my clients, what I'm seeing is a lot of them are fixing at the moment because they are saying that the fixed rates will be increasing, the variable rates will be increasing in the near future. So that's what we're seeing at the moment.
So the 3 to 4 year is where the banks have already started increasing. And the others, so that's the speculation that if that's increasing, then the variable is next. What should we do in the short term? So what are that's you're recommending your clients to do given the scenario?
Obviously, it'll come down to individuals again, but a lot of them are fixing at the moment, depending on the bank you go to. Normally, a fixed rate home loan with a lot of the banks, there's no offset account. So if there's no offset account, you can't make additional repayments. So what offset account basically means is if you have surplus money sitting in your transaction account, you can offset your mortgage interest by having extra funds in there, and you pay less interest on your mortgage. If you do fix your mortgage after the fixed period, the loan automatically normally reverts back to a variable loan after that fixed period. So you can renegotiate the fixed term after the fixed period ends, or you can leave it variable and do a pricing discount with your same lender or different lender if you choose to refinance at that given point in time.
Which is where knowing a good broker like yourself comes in handy, to discuss your individual circumstances and what would be of benefit to you.
Yeah. So that's what we're seeing in the market at the moment. Also, what we're seeing in the last quarter is the owner-occupied loans are basically written more than investor loans at the moment. So the owner-occupied market is very strong at the moment. We're seeing a transition, obviously with the lockdown as well. We're seeing across the country, more people are spending time at home, so they're doing renovations on the existing property or buying another property, or buying lifestyle properties as we see it as well. So the owner-occupied market is very strong at the moment compared to the investor market.
Yeah, which we are seeing an increase as well. A number of people, like in the last couple of days, I've had a lot of people look at, well, what else can we do in your market, in the Hills District? What else? What are the opportunities that are coming up? There's a great article that we will share shortly about the future of Norwest, the suburb that our office is in, and the plan of that. It is phenomenal. We should get Tim Spencer once again. We had the managing director of Malfa Norwest attend to provide their vision and what the plans for the future are. So we will definitely bring them back as well to discuss what the plans are. But very exciting to see how the economy is going to be recovering after the pandemic and what is in the pipeline in terms of growth. Now, in terms of the property market trends, interest rates, what are some of the other? Is there any other?
Also, another back of the fixed rates that we were just discussing, there's another feature called rate lock. Normally, you can rate lock your rate with the existing lender. Normally, there's a fee involved in that, but it's probably advisable to do now, depending on the circumstances again, just to guarantee the fixed rate. So sometimes when you're getting a fixed rate, you do the application, but by the time the drawdown happens with that relevant bank, the rates have moved. So then you get the new interest rate if you haven't rate locked with the existing bank. So be mindful of that if you're fixing your rate, especially in this environment where rates are starting to move up.
Yep. Do you see rates increasing in the future because of high demand in real estate and jump in prices? So inflation, that will cause inflation, and increasing it when the inflation is increasing, the monetary policy will be tightened, which typically has 3 to 6 months from actually coming into effect when the changes in the interest rates happen. 3 to 6 months to the economy, to the property market. So I think that
that's why we're seeing the rates increase. They're tightening the monetary policy just to ease the hostility in the housing market. So what we also seen the last week is that one of the banks has put their assessment floor rates up as well. So they're tightening a little bit of the serviceability and living expenses as well. So that will have a little bit of effect on the borrowing capacity, which will be obviously noticed in the next couple of months. There's always a time lag involved with these things until they hit the market.
Absolutely.
So that's what
there you go. So the main topic of the conversation with our clients at the moment is what's happening with the interest rates, which is where we thought we'll bring this episode to you.
On the back of this, there are a lot of hot deals available on the market right now. There's a lot of cashbacks available, refinancing. We're doing a lot of refinancing, a lot of equity cash out, whether it's for non-structural renovations on existing property or just to cash out for a deposit to buy another property. Valuations are coming in pretty strong at the moment, obviously with the strong housing market. So if you're looking to make a move, whether it's on your existing property or buying another property, now is the time to capitalize, and the rates are still lowest they've basically been in the last in history.
Exactly.
So rates are still very low, even though they're slightly going up, but in the scheme of things, very low.
Absolutely. Any final words before we finish this?
Hot cashback offers with a couple of the major banks.
Tell me about that. So what's the dollar amount of those cashbacks? Who's eligible?
They're ranging from $3,000 for a refinance. Minimum loan size is normally $250,000. So it's mostly on owner-occupied loans, investor loans as well, depending on the lender we go to. So they're available out there for customers.
So when you're refinancing a loan, there are normally the costs involved in the applications. What happens with those costs?
Normally there's no application fee. Normally there's a government registration fee, which is a duty on the mortgage, which has to be discharged and registered every time a mortgage is refinance or new purchase. So that's a couple of $100 there. Normally there's a discharging fee with the existing lender when you refinance, but normally when you get this cashback offer from the new incoming lender, that basically they pay for your fees plus you got money in your pocket, and normally you're getting a better interest rate as well than your existing lender. So it's a win-win situation. You're not out of pocket, you got a better interest rate,
And you got money.
You got money in your pocket depending on what you want to do. If you want to do cash out, or you just want to simply refinance just for a dollar refinance just to get a better interest rate. One thing also to be mindful of is when refinancing, normally we do a 30-year loan term, but normally say if you've had the loan for 5 years, so you've got a remaining term of 25 years. A lot of the customers, where they make a mistake is they refinance over 30 years. So what that means is your repayments over 30 years, you'll be paying more interest over a 30-year period if you decide to keep the loan for 30 years. But if you want to keep the repayments over 25 years, so because you've already paid 5 years of interest mortgage to the existing lender, then you should do the new loan term over 25 years. But it will depend on your individual circumstances again. Sometimes the customers do want over 30 years as they want lower repayments, and they can offset their mortgage interest by having surplus funds in the offset account, which frees up cash flow to buy another property as well. So yeah, that's another thing to be mindful of.
There you go. Perfect.
So a bit of information there: refinancing, purchasing, equity cash out. Hit us up.
Yeah, definitely. More than happy to help. And talking about what else is coming up on Paris and Bazcast. So we've got next week we're going to be talking about how to buy a property through Super. Yeah. Another very another topic of discussion that can go forever, so to speak. But it's very, people are curious, because if you have, what's the minimum you need in your super balance?
Normally the rule of thumb is $200,000 in your super fund to make it worth with all the fees and charges applicable. Before, a lot of customers were a bit hesitant to buy property through the SMSF, but over the last couple of years, a lot of clients have started buying property through the SMSF. You're investing in property, which normally history tells us you can't really go wrong. So we'll be discussing that next week. We do specialize in super fund lending as well. We've got a number of banks that we do finance through for SMSF, so do let us know. SMSF lending a little bit more complicated than the normal residential home loan lending, so we can also help you with that, whether you're buying a residential property or commercial property through your SMSF.
Yeah,
we can help you.
Perfect. So we'll be discussing how do you actually buy a property through SMSF and what's involved. We will have an accountant.
All the entities that need to be set up, the trusts that need to be set up, the bear trust, the trustee companies. So yeah, well, should be interesting topics, so stay tuned, guys.
Absolutely. And then the next interesting topic that we will have at the end of end of July is property tax. So you would have already heard there is a proposed reform into the stamp duty. And the discussion will be about what are the two different types. So you've got a property tax, and then you've got the stamp duty, which is that lump sum payment that you make. Property tax, which is like an annual tax that you'll be paying when you purchase a property. We will have Leanne Pilkington, the president of Real Estate Institute New South Wales, joining us about that, and to discuss what exactly the difference is and where exactly it is at when it comes into effect, which will benefit a lot of investors
and vendors out there, because I think there's a couple of interesting points in there depending on how you transact with the new stamp duty reforms. There could be some advantages if you transact in a certain way when buying a property in the future when you decide to go sell it. So there's some very important points I think that's going to be there.
There you go. Stay tuned, guys. Really appreciate you tuning in, and do get in touch if there's any other questions or any other topics that you would like us to bring to our weekly episodes of Paris and Bazcast. Thank you very much for listening. We'll see you guys next time.
See you guys.